What do you want to talk about today?
Trade deal. We're going to talk about what we can do with this bean movement and all the opportunities that it's going to create on the hedging side of stuff. And we'll touch on the speculation side of stuff. But exciting markets, lots to talk about finally.
Thanks to American Federal Bank.
Yeah, thanks for our sponsor.
Welcome to Hedge Heads, where hosts John Prishman and Ryan Tungseth discuss commodity markets, hedging, and anything related to trading futures. Remember, the risk of loss in trading commodity interests can be substantial. These are opinions only and not trading advice. While no one knows where the market's going, they're not afraid to share some ideas.
Well, John, we're back on another exciting episode of Hedge Heads, and I have one number for you.
What's that?
81 million.
We've been talking about it. It's a number that's important. We've been talking a lot about it for a lot of episodes.
And that's not my bank account, sadly.
No, it's the acreage on soybeans this year. An overwhelming amount of calls. Like, this is back to the good old days. What's been going on? Not all of it's good. I mean, a lot of calls are cattle. We won't get into that right now. We'll say that for the tail end.
Oh, we're going to get into cattle.
But yeah, we're just going to talk about cattle. We're probably not going to talk about everything else associated with it because you can go online and get all you want on that. But it was the 81 million acres, and that's what matters. Guys are calling, hey, I can't store this, or I'm going to store this on beans. What's the outlook? Or I want to cover it. What should I be doing? That's all the calls have been for the last 2 or 3 weeks. That's why you have guys like Ryan and I to bounce ideas off of. Like, we won't have all the answers, but we're going to point you in the right direction for your specific what situation that you're in. A lot of it's been, I am not able to store all the beans, but I think there's upside this year. What makes sense? Guys have looked at 1070 calls, 1080, 1090s with success. But, it's a different journey for everybody. They want to cover stuff that they didn't have room for storage. Back to the 81 million acres. Now, the surprise on Sunday, of course, was the Bissett mentioning that there is, in fact, a deal down the way coming. And I think why the market reacted as positive as it did is because he said it, not so much a Trump tweet with, what people might not trust it, or, there's been some empty promises. I don't know if anybody's noticed. Not all the trade deals that were on the finish line actually happened. Go back to the China deal, June 25th. As a matter of fact, one of the Trump tweets was, in fact, that this is a done deal, just need to basically sign the deal. Fell apart on the finish line. So that's why you still have to be cautious. But Bissett was the one that I think I have the last name right. I mean, I don't know the exact spelling on it. But anyway, he's the one that's saying it. And that's why the market's paying attention. Now, what's debatable is the numbers. But in my mind, the fact that China's in, going back to this 81 million acres, that was the chunk of demand that's missing. As long as it's pretty much what they were going to buy anyway, that's still a very big positive because of the low acreage this year. This is creating opportunities. I've mentioned in the past, and definitely on the Insider, we're talking about it. But we finally have exciting markets, something to talk about. We've been saying something's going to change and it'll make the markets exciting. It always does. Then 4 months went by and nothing did. But now finally it is. It was a little slower than normal for commodities. But if anything, there's too much action for me this week. You can hardly handle the phone calls when markets get like this. And it's something exciting to talk about. Wheat's come up, corn's come up, beans have come up. And a lot of phone calls are, about marketing corn. Beginning to market corn, holding off on marketing corn, what to store, and then obviously in beans. And then wheat is just that market that people talk about third. It's never really the first thing. But we've had some stuff in wheat that we've been looking at. Kansas versus Chicago we're following. We're following wheat versus corn. That's narrowed up this week. So there's things moving and things to do. What are you seeing?
I was thinking about, as you talked on those things, that we have talked a lot about the corn wheat spread, and the last few weeks, especially on the Insider, have been talking about the Chicago Kansas spread, which has made a huge switch in 20 cents. Since Kansas is over Chicago now.
The wheat corn has made the big move. The Kansas is still kind of stuck in the mud a little bit, but
but it's back. Oh, I mean, Kansas is back over Chicago.
I didn't see that.
Under.
I thought it was still under, but I'm not positive on that. I've been too busy with everything else.
I'm sorry. I have the wrong charts up.
Yeah.
Forgive me. I'm putting out fake news.
What?
It's 9 cents instead of 10 cents. See, it moved.
One would expect that to straighten out, but it's been 90. Kansas has been 90 cents under, like you mentioned. Odds of that happening are very high. It was very different in fundamentals. Wheat's been selling really well. And generally there's weather problems in Kansas City that they're worried about, dryness. It's the West. That hasn't been the case for the last year, that I remember. It wasn't last year they had a good crop and it wasn't too dry. But back to 81 million acres. If there was ever a year for beans to have upside, it's this year, but we've had a lot of fundamental problems as well, and that would be China being out of the market. So hopefully the mystery's solved on Thursday, and cross your fingers, it might even be a better deal than expected, but there's also a possibility that that it doesn't happen at all.
I mean, I definitely have some thoughts on that, on both the trade deal and maybe the 81 million acres, but I do love that the trade deals are announced on the weekend after November options expire.
Yeah.
That's typical.
Yep. And a Sunday, just another typical.
Exactly. On top of that, no matter what the trade deal is announced or how that is, I do think that we need to keep in mind that South America is producing more, and the news out there is that they're going to produce even more acres next year.
Yep.
South America is increasing production.
Yeah.
So if we're going over 81 million next year, no matter this trade deal needs to be pretty sweet, and we're still going to need to pursue domestic usage.
Yep.
For the price to continue to appreciate. There has to be a place to use these beans. So I think it's great that the price is up. I think we need to be looking and talking about marketing opportunities now.
Yeah. With
the price up. Let's see what the trade deal is, but it's not like all of a sudden beans are going to be $14.
No, it's not going to happen overnight. And you're leading me right into what we were going to talk about. Why is it exciting? Because this is what provides the opportunities. This is where you break the cycle of having too much at harvest and nothing marketed. We are tracking December 26 and November 26 beans. I like to use strategies, and I think this is most important, where you have guarantees on price, and at the same time, you leave your upside open, especially this time of year. Where guys really struggle in marketing is they like the shortcut. They like that black and white, either it's sold or it's not sold. They don't like it. They use it because it's the only tool they know how to use. Meaning I have many guys tracking December 26th, and they're going to pull the trigger. And same thing on beans. For me, I'm in the camp that you want to leave the upside open when you have situations like this. Yes, you need to find those zones where you need to apply this stuff, but why give up on stuff before it's even planted? So you have this camp that's cautiously optimistic but still wants to buy insurance for the downside. Then you have the other camp that just goes for it all summer long. Sometimes they're rewarded. More often than not, they're not rewarded. And if they sit on it too long, they get the lowest price at harvest, which happens year after year. So you want to find that equilibrium where you're understanding, is it a good year for accumulated contracts? Is it a good year to sit on it until July? Is it a good year to be very cautious, with new crop stuff? So if we get bullish in old crop beans, which could easily happen with 81 million acres, and I keep saying 81, a normal year would be 85 to 88 million acres. Mm-hmm. So it's well under what's normal, call it 86.5 to 87, average. So that will provide, hopefully, the opportunity for a corn, wheat, and next year soybeans. So that's what I'm excited about. It's probably going to provide the opportunity levels. Today's calls were even, guys starting incremental sales. Should I not? I'm a big fan of incremental sales. Average yourself in. What do we have? A dollar rally in beans very quickly. And, not quite $1, just a little less. And then what do we have? 40 cents in corn off the lows or more. So this is where it starts going off. But it's also a good year because options are so cheap. Even if you make early sales like right now on stuff you should have sold, is there a way to cover it? And, options are very affordable. But timing is everything. And of course, that's what we do behind the scenes. We're not going to discuss the timing on here because we can't. It's against what's allowed. You can't give specific recommendations. It's better just to have a conversation with us and get to know your farm and your operation and what's going on. And then you actually can get solid advice. So it's really what Ryan said is, yeah, it's great, but that train in South America is not going to stop. And that's what got us into, we have great demand. All the politics aside, we have record demand in corn domestically and exports right now, pace-wise. Wheat's best sales in 12 years. And now it looks like China's back. There actually isn't any problems but the South American competition problems that we have. A lot of people make a lot out of nothing in the politics, but the truth is demand's better than it ever is. We simply produce too much. South America is not going to quit, so you got to play a defensive. But at this time of year, I'm a guy that likes to leave his upside wide open on stuff that you're either marketing now or you plan on marketing later. So that's just where I sit on that stuff. I don't know. What's your philosophy for this time of year specifically in marketing?
Sadly, I don't have one. So I think that it's tough. I think marketing is tough in general. When you get to this time of year, especially, I prefer with the clients that I work for that we're looking at the next year, that we're not making decisions for this year. Now, when you have a year like this past year, that's not always going to be the case because there wasn't necessarily opportunity. It's been a really, really hard year.
Yeah, it's been harder than normal.
Yeah. If we, 2 years ago, hopefully we were already marketing out.
Yep. You go back to listen to the podcast. You can see what we were saying back then. And it was
that's
easier.
Where, like what you're saying of breaking the cycle, like this is where we need to look at opportunities. So I think the hardest thing is when we see, like, let's say this trade deal is amazing and we see beans making a run here. It's so easy to then sit on our hands the other way because beans are just going to go up for the next however long, and that's where the feel is. This is where we go back, like even a month ago or whatever, like you need to pick your levels and be ready to market at those levels when the opportunity comes.
Yep.
Because it's here. The news is out there. This is the missing component we were waiting for some appreciation. Now, is it going to last forever? Is this deal even going to be as good as the market says? As what the market's showing right now, we don't know. Maybe we should be buying puts right now.
$1 million question. So, and that is the problem marketing in a political environment like this. Near impossible to know for sure. That's why I tend to favor the strategies that have your guarantee to the downside, but yet have your upside open. You can't have your cake and eat it too, but you can get pretty close. Like you don't have to commit these bushels. You can buy a put. Keep it that simple where it protects that price to a certain time period and you have your upside wide open. And that's what we suggested 2 years ago for corn on the $5 puts. It was as easy as it gets. You got $4.65 guaranteed no matter what happens, futures on per option, and then you had your upside wide open. What did guys do? They saved that 33 cents to lose 75 cents. So there is a way to get in the markets and not have margin calls. And, but that's what we do every day, try to figure that out. And it changes every day. So you're not going to learn about something one day and then the next day, or the next month, you're going to apply the exact same thing. But that's why guys like Ryan and I exist, because it changes so often. This is our job. This is what we look after, and this is what we try to, talk to the clients about. So that's what your goals are, to start breaking. If you're just a pure cash guy and it's been working wonderfully for you, stick with it. Like, you're going to be a rare breed that runs against the herd and times it perfectly. But if you're really struggling and you find out you're holding bushels all the way into harvest and you don't like the low price and the whole cycle will start over every year, it'll be the same thing for you almost every single year, with the South American production being where we're at. In other words, you're going to have to be a much better marketer than in the past, with inputs soaring and the windows a lot smaller than they used to be. This is a change I don't think is going to change anytime soon. So the quicker that you start learning about it, and I'm not saying dive in and get yourself in and over your head, you start learning about it, the better off you're going to be in the future. Or you could go online and complain with the rest of them. I mean, you could be in that group, have fun. That's going to get you absolutely nowhere. But there's plenty of them. You'll have a lot of company out there. Try to be the guy that's not doing that. And if you can learn about something, or if you know and you're very advanced, learn more. And that's my advice. It's ever changing, and hopefully we have some opportunities. That's why we're excited. Things are changing. It's not the most predictable, like you said. I'm not saying we got to figure it out. Right. You take this day by day, but it's like the shift and you can feel it. Still a huge amount of corn acres. You're going to have the guys saying it's 30, 40 bushels less than normal. Yeah, you're going to have that every year. You're going to see that online every year. Hard to pinpoint. I've got a lot of mixed, I would think yield's going to go down. I think the trade thinks that. But then you have the demand too high on the feed and residual use. So it'll probably even out, where the more exciting market right now is soybeans, without a doubt.
Yeah. Well, and that's showing. I was looking at the volatility earlier.
Yeah.
Last week we were looking, between 10 and 12% for volatility. This week we're in the 16 to 20%. That's going to affect your option prices.
Yeah. You start getting news like this and that. I put out a tweet long ago about how you'd have to be out of your mind to sell this volatility. And this is why. Like, you're just one announcement away from a lot of movement. Surprising on Sunday night, though, it only opened up 11. There was plenty of room to get involved on Sunday night. It was so poor of an open with that news that I chose to kind of play it cautious, which was the wrong thing to do.
I did the exact same.
Yeah, I didn't like, because they don't normally let you in over a weekend like that, but they did this time. Actually, you could have done whatever you wanted Sunday night and been looking very good by this morning. I mean, it was up 30 cents since he's announced that, where you could have got in. But it all looks easy in hindsight. We have the Thursday, I think it's Thursday, the meeting, and that numbers are supposed to come out. So look for volatility to increase. When I say volatility, it means we don't know where it's going to go. It's just going to move faster than what it's been moving.
Yeah. Well, and when I remember, I post the
daily ranges,
and we've gone from single digits up to solid double digits in beans now. So, but surprisingly, beans have still only been in the mid 20s, where, there's been times where beans will easily do 40, 50 cents a day.
Yeah, and we could be headed to those times again, but again, the dark cloud is South America's production. What are they, 60% planted? Starting to get dry, though. What was missing last year was the excitement. No weather problems from day one in South America.
Across the world.
Yeah, across the world. And then no weather problems for ours. That, of course, that's debatable. There's areas that always have weather problems, in the United States. But I'm saying in general, there was no it's hot and dry even for 2 weeks. There was none of that. Super unusual that the futures would collapse in February and then have perfect world weather. So I don't expect that this year, but I also don't know. If I did, we'd be doing all right. But I would think it was going to go back to a normal pattern, and you're going to get at least some scares here, providing even more opportunities. But an exciting development, though, at least in the grains. That wasn't, I would say, it wasn't as expected as. Like, Sunday was definitely a surprise. Mm-hmm. Go back a week and a half ago, we didn't even know if there was going to be a meeting, but that's just the world we live in with the daily tweets and going from 0 to 100 miles per hour, or it's canceled, or there's going to be a 1,000,000% tariff because someone said something. It's exhausting. I think everybody's exhausted. I certainly know the ranchers are not a happy bunch right now, or guys in the cattle business. So it's affecting a lot of markets, unfortunately. But that's what's happening right now, and I don't think it's a good thing. But we're more on the hedge side of stuff, and hopefully we can use that to our advantage. And that's what's going on in grains right now. Volatility is picking up, and we have something to talk about other than wheat going down every day. See that wheat cattle spread, by the way, that's got hit a little bit.
Yeah, you wouldn't have wanted to be in the wheat cattle spread on Monday.
You wouldn't ever want to be in that thing, but it's, even after we were making fun of it, it was months ago, it went on a long time after that, and it looked like it was way too dangerous or expensive. It's not even real spread. It's just wheat was down pretty much every day and cattle was up. So it's a joke more than anything. But that's got hit a little bit here. We could dive into cattle and really talk a lot about that. I think everybody knows what happened.
You don't sound like you want to talk about.
Well, it's not too often that you can go to a single sentence or tweet that completely derails a market, but in this case, you can. It was the Argentina tweet. I thought feeders were in a bubble the way it was versus live cattle. Like, I'm not saying live cattle. Live cattle is where the cash market was. Feeders were where the cash market is. The problem with the feeders is they'll pay anything as long as it keeps working.
Yes.
So that can get into bubble territory. Without a doubt it was. What's a fair value on a calf? I don't know, nor do I want to argue that. But I do know it was walking too far away from live cattle, not sustainable in the least. And then it popped. Guys got involved. A lot of guys are wore out if they bought LRP. And that'll bring me to what I want to talk about in cattle. So you have your LRP insurance, and it's got its benefits, it's got its drawbacks. One of the biggest drawbacks is what's happening right now. Let's say you have feeder puts on, right? Just January, and guys do have it. They were expensive, but they do. They have the choice now. Let's say we drop another $30, something ridiculous. They have the choice of getting out of that put. You don't have the choice of getting out of your LRP and taking that profits. Meaning, if you don't think there's any more downside on your hedge, in grains, it works the same. Yeah, it works the same in every market. There's no set rule that you have to take it off because it's expiring. LRP has to be in your little tiny little window. This can go way down, and it's happened in the past in cattle. Guys can feel like, hey, I don't feel like I have the risk. I would like to take my profits on my put. You can't do that on LRP. That alone, and there's big differences, and like I say, it's two different tools. That alone would make me never even consider LRP. It's the hot thing. Don't get me wrong. Everyone loves it because it's subsidized. It's cheaper than puts, and it is different. And we won't get into the differences. It can match a certain guy's production over another guy's. You have basis rates. There's all kinds of different things. But that one thing that you're stuck in that, and you're stuck in that window only, versus the flexibility a put has, you couldn't talk me into changing my mind on that. That's where I sit. I wouldn't consider selling LRP. Not a big fan of it. It works for some guys. Don't let me talk you out of it. But this is the exact kind of situation where you have the flexibility to get out whenever you want. We're not in January. The LRP is if you have a January LRP, it's going to pay then. It's not going to pay now. So you can get out. The guys with the puts can get out. I don't know if they're going to. I have a number of guys in them, and we'll see what they want to do. But you have the choice.
Right. Somebody told me that if you know your synthetics, there was capitulation yesterday. So
I saw that on Twitter, and I was talking to one of the guys that had puts at the very high tippy top of the market. He doesn't even have cattle. Just right day, right time, right everything. I was trying to explain that to him, like, even though it can't go down anymore, there's a synthetic value on the option, and they're paying so when it opened this morning, it was down $6 or $7. You couldn't even get what you could got yesterday with it limit down. It was trading well below that. So at the height of the fear, you get this, I'll pay anything to make this stop. And the only thing trading are spreads and options.
Yep.
A lot of people don't know spreads are trading too. Spreads and options. Spreads not going to help you if you're stuck long and you need something, but a guy desperate enough will pay up, and that's where the synthetic value is. The pool of sells, and you can tell where they think it's going to open the next day. That can change in 10 minutes. Where the synthetic value is, what was it? It was like another $11 lower. Today.
I don't know what the dollar was.
I think it was something like that. That's what January is indicating. And guess what? It was down $11. So the synthetic value wasn't right on the open, but it was right. It was down 13, I think, at one point.
Yeah.
Just a complete train wreck. Tune into Facebook or any of the other phone groups, Twitter, and you can read a lot more on it. We won't get into it, only because we like to talk about hedging. And I'm not going to say you had your chance to hedge. The hedges hadn't been working. You had a kind of a black swan event.
It goes back to this whole year and how hard it's been.
Yeah, it has.
I mean, you could try and hedge, but the way the market was going every day, it was costing you a lot of money.
Yeah, every day for the people that were hedged. Yeah. And then if you bought a put, it was worthless. If you bought LRP, it was worthless. So you do a couple rounds of that, you're not in the mood, to be spending a lot more money, even though you're making money. You're like, I didn't need it, blew all that money, I'll skip it this time. It feels like that's what's going on here. And there's probably going to be more than normal amount of anger, because if you were going to skip a round, it was here. Although it was definitely the most dangerous round, it was that exhaustion from being wrong for that long. Mm-hmm. And then this happens in grains too, by the way.
Trust me, I know I was one of those guys for a while.
You get wore out by the margin calls and you start giving up. That's about the time when you need to get in. Everything always looks so easy in hindsight. I won't be berating anybody. It's been brutal on the hedge side of cattle forever. Well past what a guy would have thought it was going to do. So we're in uncharted territory. I'm not going to pretend to tell you where this is going to. No one's ever seen anything like this. They're going to debate endlessly whether you can import this and it's going to affect the markets. What I do know is fundamentals are solid. The demand had not been getting hurt at the top there. We had not been rationing demand. Whether we can get the speculators back in here or not, this is the $1 million question, whether it's going to bring cash down a ton. Don't know that yet. Early indications, for sure, it's down in the sale barns. Today in Fergus, it was down a little bit. But you got to expect that in this kind of volatility. But this is the reason why you hedge. I mean, that for things like this to happen, if we knew that was going to happen, everybody would be hedged. It's usually something like this. But not too often can you pin it exactly on one person. This time you kind of can. At least the temporary top.
There's a consistency with that in all the markets, though.
Some are more vague. This one was like, no, this is exactly top pretty much to the second that was put out there. So it's maybe a record for that, like a tweet, and then the exact moment the tweet came out, the top came in. Mm-hmm. But we'll see how it all develops. To me, is there any opportunities? Spreads have gotten very, very, very dangerous. Sorry about that phone. That actually was the guy that owned the puts that was calling. You probably want to know how much you made.
I mean, just by the number of times your phone has rang during recording this, well after the markets has closed, tells you how much this has changed the markets in general.
It's been
both the tweet and the tweet and the news.
Since I get up, it's nonstop phone calls, and it's not been like that for 5 months. It's been the deadest phones that you can, you're calling guys to get, getting a hold of them. Now the phone won't stop ringing, and that's why, like I say, it's exciting. It's like there's things moving, there's things going on. Not so exciting, cattle's crashing necessarily, but it's exciting because this is what the commodity markets normally are like. What it's been like for a while has been really difficult, hard to determine where it's going to go. Then you have Trump tweets that makes it even more impossible. Keeping your powder dry, we've talked about that. And now it's time to start moving off the sidelines when you know what you're doing or what you're looking at, and using risk, using risk management as well. But you're getting to the opportunity markets. I think that guys that trade also are probably excited about the markets moving a little bit. Hedgers will hopefully get some more opportunities, but overall, just completely different stuff with 1 million phone calls. Happy to answer them. We'll go over everything. That's what I do. That's what Ryan does. We'll talk to you about your situation, what you can do. Here's what we're looking at, and then you just decide for yourself. And that's what we enjoy doing. So don't be afraid to just check in, even if you're not a client. and see what we're thinking. We'd be more than happy to talk with you when we get time.
Yeah. Well, and not just talk with you. I do want to talk our sponsor a little bit too, American Federal Bank, but also happy to sit and talk with you and your banker and figure some things out.
Yeah.
Which I think it's important to talk to the whole team.
Yes. And we've hit on this on many episodes. Getting the producer, the banker, and the broker or the advisor together all on the same page is leaps and bounds better than everybody going in all three different directions. Like when you start coming up with a plan, developing a plan, sticking with your targets, and then getting the orders in and doing that, and the banker's on board, and you have a banker that's knowledgeable as well, very important. Things work a lot better.
Absolutely.
They do.
Absolutely.
I still like the limited risk. I'm more of a limited risk guy, but there's a lot of variations of that.
I think bankers like limited risk too.
They do too. They like their black and white numbers too. The joke is they're always there telling guys the hedge it when it's profitable, but then when the margin calls come, they're not there. It's not like that. Like if you have a good relationship and you guys know what you're doing, it should be like good. Like when you have that. If you're kind of confused by what I'm talking about, you do need to make changes.
Yeah.
Because it shouldn't be that way. Like you should have guys that can either refer you to guys that know what they're talking about, or but you have a plan together is my point, and you have a dollar amount in mind. Bankers like that. We're going to risk this. Here's what the puts cost. Here's what the calls cost. And just get on the same page. And really, that's how a healthy relationship should be. And there's nothing wrong with that. That's what you should. You might not want to talk every day, nor do you need to. But checking in and coming up with a plan. Some of the best marketers I know talk to their banker often. And like I say, it's all about developing a plan, sticking with it, having risk management. And that's what everybody should strive to get to.
Yes, absolutely.
And banks help. And that's why we're talking about American Federal, and we thank them for their sponsorship.
Absolutely. On that side, do you want to talk metals, the gold, platinum, silver? I mean, there's been some excitement around those as well. Gold's been down a bit. Silver looks like it bounced back some today. I don't know if you've been following. You've been so busy with the other markets. But.
No, I haven't. And it's kind of gotten to the where it's getting tricky. Obviously, everything's come off a lot from the highs, and that's the nature of metals. Like it's nice until it isn't, and then it punches you right in the face. But it'll never change. It's always like that in the metals. Where are we going overall? I'd say we still have all the inflationary risk that we had before. The Dow's making new highs. There isn't anything cooling off price wise. So likely guys are going to be looking for dips to buy, but know what you're doing in those markets. There's no limits there. It can fall as much as it wants to in a day. Like there's nothing to protect you. Know what you're doing. There's a lot of different sizes. There's 1,000-ounce silver, 5,000, which is a big contract. Micro gold, which is 10 ounces, I believe. 33 ounces, and then 100-ounce gold. Platinum's 50 ounces. These are the things we know. Do you have questions on metals? Call us. We follow them very closely. Just haven't been following them lately because obviously there's a lot more stuff moving, a lot of stuff going on, and you can hardly handle the phone calls coming in. But yeah, I like the metals, and everybody else does, but they were overdone, and now we're correcting. Whether it's the beginning or the end, I don't know. We talk about the bubble that I think the U.S. economy is all the time. Don't really need to talk about that until we see the numbers really turn. The Dow is going to do what the Dow does. Why don't we buy it? I don't know. It goes up every day. It's like the second I do, I'll stop it. When I do, I'll let you all know, and then you can get on the sidelines with your investments. But it's really, just marched on new highs. The China trade deal, or at least the framework of it, is the new breath that got it back up. We were just talking about regional banks last week. They swept that under the rug, and now the panic's gone. Gold's going down. Stock market's coming down. Cattle's coming down. A lot of markets coming down.
It appears the job market's coming down, which is a little concerning.
Yeah, you have very rough edges as commodity or to this economy. It's been that way for a while. I think it's a matter of time before, people start falling behind on payments, less jobs, and it's going to slow down. This administration obviously thinks they can grow their way out of it. I think that it's cyclical. I don't think it has a lot to do with presidents, and that might not be popular opinion, but I'm more of it's a business cycle, and this has been going since 2008 without any sort of correction other than your brief COVID correction, stuff like that. This thing's been up since 2008 and due for a hefty correction, just everything in the United States. I hope it doesn't come, but it's the natural business cycle and very likely to come.
Right. Anything else you want to cover today, Jon?
Opportunities. No, you finally you need to be on the phone checking in. That's what I would be doing. These are the markets that create opportunities. Is there anything we should be involved in? Is there anything we should be looking at price targets? Start planning. But the volatility is here, and I don't think it's going away anytime soon. So buckle up. We're going to have a little more news on Thursday that should move the markets quite a bit one way or the other.
And we'll be here with the insider before it happens, so we won't have anything. No.
Yes.
We'll have more on the insider.
We will. We'll definitely talk about trades we're looking at because of what's going on in the insider this Thursday that we're at least following.
Excellent. Thanks, Jon. Oh, you should leave your number.
218-731-1578.
No, thanks, Jon.
You're welcome.